What's good, guys, and welcome back to another weekly market preview here at Elementary FX. For this week, we'll be going over three different pairs, which will be the gold, the pound, and the euro, all of which will be against the dollar. So if you've seen last week's preview, you'll know that we had quite a decent week, as we had 3 out of 3 trades, all of which we analyzed in the preview. So let's hope we can replicate it this week. Alright, the first pair we'll be looking at will be the gold on the daily, and as you can see, I've drawn out a pattern for you. This is what you call a potential bearish godly formation. We have our X to A leg, our A to B leg coming right in that 618 retracement. We have our B to C leg and our CD completion coming right in this zone highlighted in red, what I like to call a decision zone, because if price comes into this zone, we'll be looking to make a decision to go short. However, since this is on the daily chart, it could take a while before price enters this zone if it ever does. So this is something to keep an eye out for those who trade gold on the higher time frames. If we want to look for opportunities leading into that zone, we can zoom in to the 4-hour chart and have a look for look for potential long opportunities. As you can see, I've highlighted a zone in red, also known as our decision zone, because price has reacted many times. The price has reacted to this area many times previously. You can see support, resistance, not getting support here. If I were to look left, you can see that price has also acted as support here. Because price has respected and rejected this area many times before, we will be expecting price to do the same if it ever comes down into our zone. So now that we have structure out of the way, we can look for Fibonacci levels that can confluence with our structure zone. The three different swings that I'll be looking at will be this: swing low to swing high. Let me just draw it out for you. Swing low to swing high, swing low to swing high, and swing low to swing high, right here. So looking at our first swing, we potentially have a 618 retracement coming right in that zone. 618 right on top of the zone. If we look at the previous swing right here, swing low to swing high, we have a 618 coming right below that potential decision zone. Now if we use the longest swing in this analysis, we have our swing low to swing high, and we potentially have a 382 retracement coming right in that zone. 382 lines up right on top of our previous 618 retracement. So if price comes down into this area, I will be looking for a long entry. However, if you are more conservative in your trading, you could possibly wait for a double bottom before you go long. So this has been gold on the 4-hourly chart, and the next pair we'll be looking at will be the pound dollar. And as you can see on the chart, ever since the flash crash which caused this candle right here, the pair has been ranging, and like we have emphasized many times before, ranging markets are best for advanced pattern trading. So let's zoom in on the 4-hour chart. And look for potential opportunities. I've also highlighted and drawn two red lines to identify the nearest points of structure. As you can see, price has respected and rejected this area many times previously. We have some consolidation here, we have support, we have a false breakout right here, resistance, consolidation, support, a lot more support to the left. So this has been a respected area where price has rejected. We also have support here, resistance here, some support here, a lot of consolidation in this area, and much more support and resistance right here. So the way I see it, there are two ways you can approach this pair. You can be aggressive and buy it up when market opens. Why is this a reasonable area to go long? Because price has respected this area, like I said previously, and as you can see, price is already at our structure area. However, this would be an aggressive entry, and I would try to avoid that. A more conservative entry would be the completion of a godly pattern, and I'll draw it out for you in a minute. We have our X to A leg right here, X to A leg. We have our A to B leg coming right at our 618. Swing low to swing high, and a 618 retracement. right here, and we have our B to C leg right here, and we have our CD completion coming right at the 127 extension of this swing high to swing low. Our 127 level brings us right at our identified structure area. So you can see, if I were to draw it up for you, this would be the potential Gartley pattern: X to A to B, B to C, and CD coming right here. For further confluence, you can use the X to A leg, which is X to A, and you can use it to look for a 786 coming right in with the 127 extension. And if I were to switch it on, let's have a see where it ends up. 786, there you go, 786 lines up right above the 127 extension level. So this would be a very decent trading opportunity on the pound dollar. Let's try something. If we were to look at local trend lines, we can use, let me just zoom it out a bit. Local trend line would look something like this. Hold on, let me switch off my magnet. We can see that this trend line has been respected because price rejects it once, twice, 3 times, and potentially here. If price comes into this area, we have a confluence of structure from our red line. We have a confluence of Fibonacci levels, 786 retracement and a 127 extension, and we also have our local trend line right here. So if price were to come down in this area, thus completing our Gartley pattern, I would be looking to buy the pair. However, like I always say, if you are conservative in your trading, you can look for a potential double bottom before you go long. So this has been the pound dollar. The next chart we want to look at will be the EURUSD on the 60-minute chart. And as you can see, the EURUSD has been bearish for quite a while. So this could, we probably want to look for a potential trading opportunity towards the downside. And as you can see, I've drawn out a red line, and this is a very notable area of structure. As you can see, price has acted as support once, support twice, support thrice. So this would be a very decent zone for entry if price comes up into this area. However, like I always say, structure will never be enough. We would need more confluence, and that's where Fibonacci comes in. The way I look at this, we are looking at 2 different swings. We have this swing high to swing low, and we also have this swing right here, because this is the candle that sticks out very nicely to me. So if I were to take a Fibonacci retracement of this candle, swing high to swing low, we have a 618 retracement coming right in that structure area. And if I were to take a Fibonacci retracement of this, probably get a 50% retracement. Let's see, 50% retracement lines up right on top. Can you see that? 0.5 lines up right on top of the 618 level. So this pair would be, if I was looking at this pair, I would possibly wait for price to come up into this zone. Let me just draw a rectangle out for you so it's easier to see. This zone would be our decision zone. So if price comes up into this zone, then I would be looking to short the pair, thus continuing its bearish movement. So this has been the weekly market preview here at Elementary FX. I just want to let you guys know that junior memberships are free on elementaryfx.com. Just sign up and type in the discount code launch100. Launch100 is a discount code for the junior memberships. What you'll get for the junior memberships is that you will have a daily market analysis, including this weekly market preview. So we post videos on Monday to Thursdays for daily analysis, and we also post videos every Sunday like today for our weekly market preview. We also post our trading journal, where we record every trade, be it a losing one or a winning one, and we analyze the trade for you, and also serves as a lesson for us, for you and me, so that we can improve our trading methods and our system. So this has been the weekly market preview here at Elementary FX. I want to thank you for joining me, and I will see you on Monday and I'll see you in the daily market analysis, and I will possibly highlight a few potential setups that I'll be looking for. So thank you, and I will see you in the next video, guys.